All right, what's going on? Welcome back to the channel. So this one mistake can cost you thousands, if not tens of thousands, if not hundreds of thousands of dollars from you being able to access business lines of credit and funding your business. Now, depending on when you're watching this, because I am recording this in the first week of January, but depending on when you're watching this, you could be costing yourself this, pretty much your ability to access this money. So whether you're watching this in the first week of January, or if you are watching this in the middle of June, or if you are watching this toward the last part of 2022, or even if you're watching this in 2023, whenever that is, this information is going to be evergreen, meaning you are going to be able to apply this in any season in your business and in any season of the year. And the number one mistake that I see, and the reason why I can speak on this is because me and my team, we help businesses and small business owners, both with just them by themselves running an entrepreneurship type of a service versus those that are running 10, 15, 20, even 30 employees. We see this day in, day out, from building up business credit profiles for our clients to helping our clients get funded. By the way, if you want access to that, I'll go ahead and leave the link down in the description, and I'll probably pin it as the first comment. So the reason why we can speak on this is because we see this day in, day out. And the number one mistake that I'm noticing is that there is a sex appeal and there is a certain sexiness that people tend to gravitate toward when they're trying to write off everything in the kitchen sink in their business. And I'm referring to their taxes. So let's say if you are a business owner and it's just you and you just did your thing in 2021 and you made $500,000, or let's even work with a smaller number. Let's say that you made 250 grand or even 100 grand, whatever that number is, but we're going to work with 250 grand. Let's say that you worked with, that you made $250,000 in revenue in your business, and then you started finding and plugging in all of these different type of tax deductions and tax write-offs. While your CPA, and by the way, this isn't tax advice, you still want to speak to your CPA, while your CPA, or maybe the person in charge of helping you file your taxes, is going to tell you to try to reduce your taxes as much as possible so that way you pay Uncle Sam a little bit less, there is a certain trade-off that's given, if I must. I'm not going to say that it's a bad thing, but there is a trade-off, right? So it depends how you want to strategize. If your goal is to maximize the funding that you get, then you want to pay attention to this next part right here. If you just don't want to pay, if you don't care about business funding, then I'm not even sure why you're watching this video, because this is geared around helping you maximize the amount of money that you get for your business. You want to watch out for how much deductions you take in your business. I'm going to say that again. You want to be careful how many deductions and tax write-offs you take in your business, because that could end up having a negative effect on the back end when you start going after business lines of credit. Now, there's two types of business lines of credit that you can usually go for. And again, me and my team, we help people out with this all the time. But before I give you that, the reason why you want to be careful with this is because even though you can have a tax write-off, that doesn't necessarily mean that it's the best thing that you can do for your business. Means that just because you're paying less in taxes on this end, you could see a repercussion on this side, because now you're left wondering, why can't I access more capital to maybe get more inventory, to maybe buy better equipment, or maybe to go out and hire better help, right? And this is ultimately going to grow your top line from 250 to 500, 500 to a mil to 4 mil. Again, whatever your goal is. So if you are a business owner, keep in mind that you have 5 years that you can have a 3 business loss or 3 business year loss. This means that in the 5 years that you're filing your taxes, you can have 3 years that your business is at a loss. Anything after that, the IRS is going to see your business as a hobby. This means that if your business is a hobby, technically hobbies don't get tax deductions, which is going to rule you out not only from being able to get business funding, but it's also going to rule you out from maximizing those tax deductions. Again, not tax advice, but it is going to kind of segue into the two types of lines of credit that you can access. You have one type of business credit or business funding approach that you can take, and that's going to be stated income. The reason why I give you stated income first is because stated income isn't dependent off of your tax form. In fact, it doesn't need, in fact, the lender or underwriter doesn't even need to see your taxes to begin with, but it is going to get based off of your business credit profile. If you have that built up, or if you're PG, personally guaranteeing, it is going to require you to use your personal credit. Now, the reason it's called stated income is because it's exactly what it is. It's what you state on the paperwork. Now, a little pro tip here. There is a certain amount that you can put on each application. Every credit union, every lender, and every bank is different. Let's say if you go to one bank and their stated income program is up to $50,000. That means once you get to $50,000 with $1, at that point, you're going to have to show your tax returns. Up to that point, it's pretty much only going to require your LLC, your state documents, possibly your bank accounts to at least see that you've been banking with them if they are going for more of a relationship approach. And of course, they are going to take a look at your credit. Now, let's say that you don't want to personally guarantee. And let's say that you only want to go off of your EIN and you only want to go off of getting credit for your LLC and through your LLC, where it's not dependent off of your personal credit. At that point, you can go into more of a revenue type of business lending or business funding, which is going to be based off of you showing your tax returns. It's going to be based off of you showing your bank accounts, and it's going to be based off of not so much your personal credit, because now your personal credit gets put to the side. And even if your business credit isn't as strong, if you have maybe you've been in business a year, maybe you've been in business two years, and you can show some strong business financials that your company has been profitable and it's just continuing on the up and up, versus when you started your business, you're just on a flat line, you're in the hole, or you're just barely breaking even, then maybe the business revenue type of business funding may not be the best approach for you. So a quick recap. If you want to get business credit that's not dependent off of your personal credit, or if maybe your business credit profile isn't as strong, you want to go with the business revenue, which is going to depend off of what you report on your taxes. If maybe you're on the other end and you're thinking, okay, well, I'm kind of in that first year where I'm kind of testing out this market, then at that point, it's going to be more dependent off of your personal credits and maybe some trade lines that you've added along the way onto your LLC. Again, that's Uline, that's Granger, that's Summa Office Supply, Crown Office Supply, right? If you have no idea what I'm talking about, I have an entire playlist here on this channel that talks about both personal credit and business credit. I'll go ahead and link it to this video. If you found value in this content and you just enjoy this, I ask you to support the channel by hitting the like button down below and join the official community by hitting that subscribe button as well. Also, if you found value in this content, you'll love what we're doing over on the Inside with Irv show, which is my podcast style channel. So if you like what we have going on over here, you'll love what we have going on over there. Once again, I appreciate you guys checking me out. Till next time, everyone, I will see you in the next video.